All views, opinions, and comments expressed herein are solely those of the speakers and do not necessarily reflect the views or opinions of StoneX Group Incorporated and/or its subsidiaries. This content does not constitute an offer or solicitation to open a trading account, to trade in any specific product, or to engage with any services provided by StoneX Group Incorporated or its subsidiaries. This content is not intended for residents of any particular country or jurisdictions where such content is prohibited.
Welcome to the Trading Global Macro podcast from StoneX, where we unpack the complex forces driving global financial markets. I'm John Kicklighter, Global Head of Content at StoneX.
And I'm Matt Weller, Global Head of Market Research for StoneX's self-directed brands. Each week in this podcast, we explore the macroeconomic trends and geopolitical events shaping Forex, equities, commodities, interest rates, and more. That's a kind of a good intro for the topic that we have today. What is our topic, John?
Topic for today is, what is a global macro market? I think that's in our efforts to kind of define global macro, because it's a pretty ambiguous term, I think, for a lot of people. And it's not very easy to access for people that are not experienced. I think that talking about what constitutes a global macro market would be a good place to really seize upon. And I think with that understanding, we'll get to a place where a lot more people are comfortable in analyzing the market, engaging in the market, and seeing the opportunities that arise there that are perhaps more accessible than what is often really detailed and data poor markets. But with that being said, Matt, what do you think is a global macro market? It's a very open-ended question. I think we could try to give you a black and white definition, but I think it's more open to interpretation. But what would you describe it as?
Sure. So it's a bit distinct from just asset classes more broadly, which is something a lot of people would be familiar with, but in some cases encapsulates some of those broad asset classes because they're both influenced by global macroeconomic developments, and they, in many cases, in turn, influence global macro developments in themselves. So at this point, I'm sure we'll discuss in some detail some of the more marginal ones, but I think things like the FX market, bonds more broadly, and equities are ones that are clearly in that bucket. I'd throw commodities in there too. Maybe those are kind of my big four that I'm confident would fit under this sort of this category here. But then it opens up a number of broad questions. Things like, is real estate a global macro market? It certainly accounts for a lot of people's wealth globally. Crypto, of course, will inevitably come up. Whether different markets like derivatives that can offer different insights into the markets that they're based on, whether those would fit in there. But I guess just to start off, John, do you disagree with my sort of big four there of FX, commodities, bonds, and stocks or indices more generally? And then is there anything else you might throw in there?
Yeah, I think you're hitting the nail on the head, particularly for those top four. But I think if you want to use the strictest definition of what is global macro, I think there are a couple of provisions that we need to think about on what constitutes a global macro. And I think obviously global is in the name. So you'd have to really consider it to be big picture and not just national. So you can have, let's say, an American investor investing in American shares, and that's more of a domestic interest. You will touch upon global macro themes because global macro will influence that market, which is probably going to be what we're going to talk about to provision the particulars. But I think purely from a global macro perspective, it's something that would inherently be part of the macro picture and global. And that, I think, FX is truly the market that or exchange rate, foreign exchange, for those that aren't familiar with the FX jargon, is the market that truly represents this, because it is inherently pricing one currency against others. So you have to be global from that perspective. And what would impact the value of a currency, if not some of these very high level top consideration macro influences like interest rate setting, growth projections, relative trade relations, and the like. So I think that absolutely constitutes a global macro market, and it's probably the place setter for what is global macro. And I think why this term is often associated to those that are in our sphere, where we talk about Euro USD, for example, all the time. But you're right. I think that you can look at commodities like crude oil as a global macro market. You could look at indices like the S&P 500 or the DAX or the FTSE 100 or the Nikkei 225 as global macro. It's just a different perspective that you're looking at, because obviously you can have Japanese investors and investing in the Japanese market, or German investors investing in the German market, U.S. investors investing in the U.S. markets. But I think the global interest and the global reflection that those indices have on those particular commodities and economies or regions is probably why this becomes a little bit more of the global macro reflection. And fixed income, very same thing. If you're looking at the 10-year Treasury yields for the U.S., that becomes a global macro perspective, not just a reflection of local financing. But between those other three, so distinct from the FX markets, which I think is the easiest argument to be made of a global macro asset class or asset. What would you think? What would you say is number 2 on your list? Commodities, indices, fixed income / bonds.
I think it's got to be bonds. Just the size of the fixed income market dwarfs the equities market more broadly. So to me, that kind of is hand in hand with FX in some ways, and of course influences FX, and FX can influence bond yields. But I would say if we had to narrow it down, it would probably, for my money, be bonds, for then something like commodities, maybe tied with indices, because that's a lot of what people are focused on, especially here in the US. But on a day-to-day basis, the price of commodities as inputs for economic output also has a very big impact on economic growth, inflation, in some cases employment, depending on where you're talking about. So in a way, I do agree with you for putting FX at the top there, but I do think the fixed income market, the equity market, and commodities would be a close second there in terms of how it's influenced. And as you were talking, I was kind of struck by different ways that we can sort of determine what gets elevated to a global macro market. And for me, things like the market cap often plays in there, basically how much is this worth? But then that raises the question of real estate, which I talked about earlier. There's a lot of money tied up in real estate. But to me, I think the second component you might want to look at is liquidity. Is this something that people are actively trading? And in most cases with real estate, no. There are castles in Europe that have been held by the same family for thousands of years. So how that price moves isn't really going to impact even the local economy much, because there's not that liquidity. It's not actively traded. And then one that we might get into toward the end of this podcast, I would say as a wild card there is sort of theme adjacency, or we talked earlier about how Greek sovereign bonds, probably not generally a global macro asset, but if you were around, and I know you were in 2010, that was like the first chart I pulled up every day to say, where are these yields going, and use that as a reflection of the level of confidence in other markets too. So different things can rotate in there based on how relevant they are, but I think we always have those core 4, and a lot of that's based around having a sufficiently large, truly massive market cap, and then a good amount of liquidity that they're actively being traded. So that's how, those are at least some of the factors that I'd look at when determining if something's a proper global macro asset. Though there are a lot in the next tier that, as I'm sure we'll get into.
Yeah, I think I agree with that. Fixed income is a very good second to FX, and it's very adjacent. Currencies and the sovereign ratings. I mean, if you're talking about sovereign debt or large representative scale debt behind the countries, because to your point on the Greek 10-year. I think no one's really looking at it right now. It's one of the more risky debts within the European Union. But back in 2010, 2011, when we had the Greek financial crisis, which threatened the Eurozone, the largest aggregate economy at the time, even larger than the U.S. when you aggregated all the countries it represents together, that was suddenly a steering component for the entire global financial system. So it elevated up to global, and obviously it was macro. And inherently, when you're looking at fixed income of that scale, especially the sovereign side of things, so representative of the country, then I think that you are going to be in the global macro most of the time. So we can look at, and we often do, I think, in some of our analysis, if you're looking at, let's say, the US and you're looking at the US dollar and the British pound, well, we often reference the yield differentials, the 10-year yield differentials or 2-year
Mhm.
yield differentials. Depends on what you're looking at. But if you're looking at the 2-year yield differential and between the US and the UK, you could be looking at interest rate differentials or expectations for central banks, because that's the 2-year time frame. They usually look at inflation and or employment, and thereby those yields dictate expectation out to the 2-year time frame. Or if we look at the 10-year, you're looking at references towards reserve status. So those are usually, especially the U.S. side of things, the 10-year Treasury is the still, despite all the issues that are going on, the top reserve asset by a wide margin, and thereby it gets into this area. But the smaller the country, the smaller the liquidity. To your point, the more diminished this gets into the global macro, at least in terms of the impact that it has. Commodities is an interesting one because theoretically, don't we all need crude oil? Or don't we all need, to a certain extent, gold, natural gas, soybeans, live cattle? Perhaps there is a argument to be made there, but obviously we're not all the countries are massive consumers, much less producers of these commodities. Do you think that there is a situation or historical precedent when commodities was much more important a global macro asset than, let's say, fixed income or sovereign debt?
Well, certainly, if you rewind the time scale far enough back before we had these sort of formal markets, if you go back a couple hundred years, just the price of oil or whatever raw materials you need to make what you need to survive, in that way it is. But I think in a more modern context, I think you're right to differentiate between some of those different commodities. Broadly speaking, I'm comfortable throwing commodities in there as a global macro asset, but specifically things like oil or gold, as you mentioned, are perhaps the most salient of those that we see with different countries being more active in mining industrial metals. Well, maybe it's a global macro asset for, say, Australia or South Africa or something, whereas that may not be as important in other countries, but still worth considering. Or rare earths in China right now, global macro asset. I would say they're not really actively traded, but they're absolutely essential to things that spill into the valuations of equity markets. And then we talked a little bit beforehand. Another one I'd like to raise is something like NVIDIA. Maybe it's just a single equity, but to the extent it encapsulates a broader theme that is global in nature and has big influences on the global economy, the AI build out, then you could say in this current environment, NVIDIA might be considered a global macro asset. So maybe it's like a situation. I'm struck by this analogy of like Saturday Night Live. If anyone watches that, you have these core characters that are on year after year. I'm not a SNL head, but like Keenan, right, has been on there for 15 years. But then you have other comedians that rotate in for a season, and maybe this is NVIDIA's season. Maybe in 2010 it was Greece sovereign debt season, and those can wax and wane in that way. So I think you have that core group that's always worth watching, and then what we try to do on this podcast, among other things, is identify some of those other themes, how relevant they are, and how they're impacting other global macro assets. So not to off the cuff kind of boil down a reason for existence for this podcast, but I think this really is a good table setting episode for what we'll be discussing for weeks, months, and maybe years to come.
Yeah, yeah. And even, I mean, the context of like the S&P 500. So obviously an aggregator that includes NVIDIA, but indices, I think, is probably a frequent reference point for us in our day-to-day analysis. And it is definitely part of the global macro ilk. But I think that's probably more so because you have a strong movement in those indices and high correlation across those indices across the world, as of right now, because it's a strong risk on or risk off, which is something we talked about in the previous episode, influence, and that makes it global macro. And it's whether it's the guidance, which I think there's are a good argument to be said now. Equities are a big guide, or indices are a big guide for that sentiment. So it's a driver of sentiment, not just influenced by it. That raises it to the consideration of a top global macro, at least indicator or barometer. But it firmly plants it within that category. but if you have situations in the past, and we've seen this in the past, where the correlation across indices may wane substantially because there's just like chop, and then no longer is it really global macro because it doesn't have the drive and doesn't have the fundamental wherewithal to be the motivator of the broader market. And then we look elsewhere. We look at commodities, we look at interest rates, we look at or yields, and it starts shifting into that area. And always FX, almost always going to be considered global macro. But you mentioned there NVIDIA, and you mentioned Greek bonds, and you mentioned housing prices. So it's interesting that there's a thematic element to it, whether it be as broad as risk appetite or whether it be specific because there's a housing crisis in the United States that cascades into a financial crisis like it was back in 2008, or the Greek debt turning into a European financial stability question, or it can also be a positive consideration like the rise of AI, which is leading NVIDIA to the drive, or the evolution of financial payment systems like Bitcoin and other crypto, and it becoming a key stakeholder. But I think global macro is not isolated to just FX and FX alone, or its secondary markets that we listed. It can also be led by what we have typically considered to be smaller markets or nascent markets. But as those themes shift and change and they become leaders of the thematics that drive our broader sentiment and our capital allocation schemes, I think that's where it becomes a global macro. Do you see any future global macro candidates beyond AI, or is it all AI right now?
It's certainly AI top of mind, but one interesting one, and I'll try not to go too long here, is crypto, whether that counts. I would argue certainly a couple of years ago, I wouldn't say it's a global macro asset because the entire space could have gone to zero, and some people would be sad, and but broadly speaking, the global macro economy would continue apace with little disruption. Now, I just looked it up before this podcast. The total market cap of crypto assets is at about 3.7 trillion. Maybe that's starting to get onto that level, but despite the fact that it's globally accessible, I don't know to what extent Bitcoin going up or down has an impact itself on the global macro economy. So I think this symbiotic relationship of assets and markets that influence the economy and in turn are influenced by the economy, that first step might be missing a bit, at least so far for crypto. At least that would be my assertion, that it probably isn't there unless it continues to grow much more strongly. So that would be the other possible candidate, the first new asset class perhaps that we've seen in a long time. But I would say it's probably not quite there yet, but I'm open to arguments on either side. What do you think, John?
I think you're right, and I think that's also what makes these incredible rises or rallies from the likes of Bitcoin or even the likes of NVIDIA so remarkable, and why they happen very generationally. So they happen very consistently over a couple of years. A new product or new market or new focus drives a massive rally, and new capital into the market, the newest generation of investable income, starts to chase that thing that becomes most popular and interesting for the time because it wasn't fully accounted for in its participation in the broader financial system. So I think you're absolutely right, and that surprise is what ends up making these massive moves, and where you have all these ridiculous stories where people become like millionaires because they invested early in Bitcoin or NVIDIA. So it's not easy to see them ahead of time. If it were, then there would be songs sung about us if we were that capable at seeing them ahead of time.
Yeah, I would be. I'd be just hanging out with you doing this podcast all the time, not doing any real work if I could identify the next multi-trillion-dollar asset class. So it's an interesting discussion, one I'm sure that will permeate our future conversations on this podcast. But I thought it was a good thing to set out so that we make sure we're all on the same page. And I'm sure more to come on this front. So over to you, John.
Absolutely. Thank you for turning in to the Trading Global Macro podcast from StoneX. If you enjoyed today's discussion, make sure to subscribe wherever you get your podcast. I'm John Kicklighter.
And I'm Matt Weller. Join us again next week for more insights into the trends and events shaping the world's financial markets. Thank you.